Under the common law and under different types of liability, this is just a table that kind of tells you what the burden of proof is, who has the burden of proof, and summarizes what the auditor's defenses is. So under common law, which is brought by clients, or by a client, the client is going to sue the auditor for breach of contract or ordinary negligence, gross negligence, or failure to find fraud. Okay, the auditor could say the breach is inappropriate, there was no breach, they had no responsibility to perform, it was caused not by anything that they did, and the client contributed to the negligence. So those are just some examples of defenses they could have. Common law, third parties, obviously the burden of proof is on third parties, and they could again sue the auditor for ordinary negligence, but it depends. The auditor can say you have a lack of standing as a third party, again causation, and then again obviously the auditor is going to try to assert or would assert that their performance was appropriate, that they performed the audit in accordance with GAAP. I'm sorry, Generally Accepted Auditing Standards. And then the final two are security laws, right, under 1933 and 1934. Under 1933, the burden of proof is on the auditors, and usually the ordinary negligence, gross negligence, or fraud. And then in this case, the auditor would be put in a position where they want to show that they conducted the audit with due diligence or that there's no causation. And then the Securities Act of 1934, the burden of proof is on investors to prove that the auditor either acted with gross negligence or committed fraud, and then the auditor again would try to assert that they had no knowledge of material misstatement, and then that they performed the audit with good faith. In other words, they could perform the audits in accordance with GAAP. So those are just, again, some of the sources of liability for the auditor and who has